Let's talk now about M&A rumours and movers.
Well, it's not strictly an M&A story, but it could become one. You probably saw this already, but Twitter
Down 20% overnight.
at one point down 26%. A bit of a faux pas. There was an early release of their results, which were due to be released after the close last night. They came out or were found on their website about an hour before that, and then they were released by a third-party web crawler. That sent a bit of a wave of panic around the markets, and as I say, they were down at 1.26%, finished up down 18% in late trading. And the reason that they were down, well, it was a big revenue miss. So the revenue was up 74% this time round. It was up 97% in Q4, and user numbers were better. 302 million users, up from 288 million in December. But the fear is, amongst investors, or the feeling is, that the company is not generating a big enough return from those users. So yes, revenues were 436 million in the quarter, which is hardly to be sniffed at. Yeah, that was 21 million less than analysts were looking for.
Okay.
It's burning through cash, and it could be vulnerable here. I mean, it's lost $162 million over the quarter. That equates to 25 cents a share. I think there'll be a lot of pressure on the management to shake things up. One comment I heard recently was that the concern about Twitter is, unlike Facebook, that the senior management doesn't really have any real skin in the game, and I think you could well see some activism here, which seems to be the flavour of the month in America, trying to sort of generate some shareholder value and get the business working properly.
Understood.